Good day, subscribers. Today I'm going to be sharing with you guys the top 5 best diversified portfolios I could come up with. The top 5 best out there, guys. So what makes a portfolio diversified? What are the criteria I would look for in a diversified portfolio, okay? So the first thing is I look for around 5 stocks, okay? Unless you're in your 50s or beyond, 5 stocks is about the good amount you should own. Now, some people argue with me. They say, you know, you should own 10 stocks. No, you should own 30 stocks, 40 stocks, 50 stocks, 100 stocks, like a million stocks. Like, people always argue with me, say 5 stocks isn't enough. I feel like 5 stocks is the perfect amount. Here's why. If you go less than 5 stocks, you're under diversified, right? If you say you only own 1 or 2 stocks, maybe 3 stocks, if just one of those stocks goes bad, that's going to kill your portfolio. If you have 5 stocks and say you got the money spread around 20% per each stock, then you're a little more diversified, okay? But you're still in your best investments possible, okay? Let's say you got a portfolio of 15 stocks, right? In my opinion, you're not a picky enough stock investor at that point. If you got, you know, what are the chances that stock number 14, you will even remotely like as much as stock number 2? It's very hard for me to ever even find 10 stocks I would actually invest my money on in a particular time. Otherwise, I'd pay an overvalued valuation, and I don't like to pay overvalued valuations, guys. So 5 stocks is kind of what I look for in a diversified portfolio. I think that's the right amount, okay? I like them to be different industries. This is huge. Different industries. You don't want to just have 2, 3 of the stocks in the same exact industry, right? I mean, imagine having, you know, 2 of your 5 stocks you own are both in the oil and gas sector, right? That would be a very bad thing, because anything negative that happens in the oil and gas sector, all of a sudden then that takes down your whole entire portfolio. So you might as well almost be in one stock at that point. So all 5 of the stocks, I want them all in different industries, guys. The next one is I like 1 or 2 of the stocks to be strong growth stocks, okay? So 3 or 4 of the stocks are more, you know, consistent companies. You know are just going to be doing great. But 1 to 2 of the stocks, I like them to be very strong growth. So you kind of balance that, you know, consistency with the growth in there, okay? So that's what I look for in a diversified portfolio. And for this game today, I didn't include any positions that my wife or I own directly, okay? I didn't include any stocks that her or I own, because I thought it would be too easy to do it with stocks I own, obviously, right? And everybody already knows what stocks I own anyways. And then also, I only used a stock can only be used once, okay? So in these 5 portfolios I'm going to show you, I didn't just like recycle the stocks and use the same stock over again. Like, let's say I really love Apple stock, right? It's not like I could have just used Apple stock in portfolio 1, 3, 4, 5, and so on and so forth. So I made sure I only used a stock once. So I hope you guys absolutely love this video today. I hope you get a ton of value out of it today. Hit a thumbs up if you do, and also make sure you click that first link there in the description. I'm releasing a full 12-part stock options mastery course inside the membership group, guys. That is coming out October 28th. Every single stock market investor needs to fully understand stock options. You can save yourself so much money by hedging bets, by hedging positions, and get so much more upside through options. Every single stock market investor should take advantage of this out there, unless you already know everything there is to know about stock options. That's not really for you. All right, guys, well, let's go ahead and get in. Alrighty, guys, are you ready? Coming in at portfolio number 5, okay? First off, we got NVIDIA. NVIDIA, they make basically tons of graphic type chips that a lot of high-end gamers use. A lot of different people use them. It's also a great play on artificial intelligence. It's one of the best plays you can possibly do on artificial intelligence. And they're big into self-driving cars, a lot of those kinds of things, guys. A very fast growth company right now. If you look at their revenues and the profits, they're really exploding with this company. So this company would count as the strong growth company, all right? General Mills, a consistent company, all right? This is a cereal maker. They own a lot of different food products. You walk around your local grocery store, right? You're going to generally see a lot of General Mills products in there, guys, especially down that cereal aisle. Some of your favorite cereals you eat are probably made by General Mills, but they are into a lot of different products in the food industry, all right? Skyworks Solutions, this is another pretty stable play, a little bit of a growth company, but not super high growth, okay? So Skyworks Solutions makes a lot of the chips that go into your smartphone. So if you look at your smartphone teardown, so you could, you know, type in, and maybe you own an iPhone 6s, type in iPhone 6s teardown into Google. Go look at that. Look at some of the chips. I guarantee you there's going to be several Skyworks Solutions chips in your smartphone there, okay? So that's a play on that. Caterpillar, this is a play on industrial equipment. I mean, pretty much everybody out there, even if you're not a construction worker or something, you've heard of Caterpillar. You've seen some of the big machinery they have. You know, if you're gonna make a highway or something, or have a huge project that need land clearing or something like that, you're gonna use Caterpillar equipment with that, okay? And then the last one is Alibaba, another strong growth company. Pretty much, I call it the Amazon of China, a slightly different business model than Amazon, but very similar to Amazon as far as how big the company is, how big it's going to be in the future, and the type of growth they're experiencing right now. So you really got Alibaba and Nvidia are really strong growth companies, Caterpillar, Skyworks Solutions, and General Mills are kind of the more stable ones there. And all 5 of these are in very different industries. All the 5 of these make their money very, very different ways, guys. So this would definitely be a very well diversified portfolio, and that's why it's coming in at number 5. Alrighty, guys, are you ready for portfolio number 4? Portfolio number 4, coming in there at the top is ExxonMobil, one of the biggest oil and gas companies out there. They're also into solar, they're also into wind, a lot of different things like that, renewables, but the majority of their money they get is from selling oil products and selling gas products. So the biggest play on that, all right? 2 things that aren't going away anytime soon because we need energy, and those are still the 2 main ways we get energy, through natural gas and through oil, all right? Adobe, if you are a creative of any kind or you're in the marketing field, you are well aware of Adobe. Adobe has a ton of different products that are subscription based, that basically anybody who's a creative or in the marketing area uses some of their products, whether you're doing something with photos, whether you're doing something with videos. Adobe is phenomenal for that, very strong growth company. Union Pacific, pretty much the biggest pure play as far as trains go in the United States of America. You know, everything that we get all around us that we buy, right? A ton of it goes through rail. And Union Pacific is a straight play on that, all right? And by the way, the rail companies are almost like a monopoly here in the United States. I'm amazed that they even get to be the way they are, because it basically is kind of like a monopoly system. So a very stable, consistent play. Nike, I mean, who doesn't know what Nike is? You know, one of the most consistent brands out there, one of the most well-known brands out there. The go-to brand for athletes and things like that. Anybody doing sports type stuff, Nike is the main brand there. And then the last one down here is Zillow. Zillow, also a strong growth company. If you ever look for a house, whether you're buying a house, whether you're renting a house, anything like that, a great chance you use Zillow for that. Or maybe you use Trulia or Realtor.com, which, by the way, Zillow also owns those ones as well, guys. So this portfolio, where do we get our growth from this portfolio? You get it from Adobe and you get it from Zillow. And then the more consistent plays are the Nike, the Union Pacific, and the ExxonMobil, guys. And that is a very diversified, very good portfolio there. And that's why that one is number 4. Alrighty, guys, number three best, most diversified portfolio would include Disney, okay? This would be a very stable company. I mean, next year, probably just as many people, if not more people, are going to visit Disney and the Disney resorts. They just opened Disney Shanghai. They're also a very big content play. They own a ton of different content companies, a ton of different channels that you may watch on TV. That's the part of their business that is kind of struggling right now. They will figure it out on how to get into skinny bundles and a lot of those different kind of things. They'll find a way to make it work. They're a very well-run company, all right? Then we have Walmart. So the biggest retailer in the world, the most profitable retailer in the world. The question for Walmart kind of right now is, will they become the second fiddle to Amazon 3, 4, 5 years from now and become the number 2 play, or are they going to remain the number 1 play? If they can remain the number 1 play, it's going to be huge for them. But still, regardless of what happens over the next few years, this is still going to be a very well-run company, still a very profitable company over the next several years, all right? Johnson & Johnson. If you go over to your local pharmacy, if you go to Walmart, go down, the medicine aisle, all right? And just start looking at the backs of packs of different medicines or Band-Aids or whatever it is, anything in that realm, you will find massive amounts of Johnson & Johnson products. You will also, a lot of pharmaceutical products are made by Johnson & Johnson, okay? A very stable business, a very stable company. FedEx, you guys probably all know FedEx. They move goods around. You probably have ordered something online in the past and it's got shipped through FedEx. You might have have shipped something to somebody else, maybe legal documents, maybe, a package or something like that. You probably use FedEx, okay? A straight play on the fact that we're all buying and selling more things online than ever before. And the last one is the Tesla, okay? So up until this time, this portfolio is kind of boring, right? Just kind of some consistent companies. Then you get Tesla down here, the extremely strong growth company. The Model 3 is just going into mass productions here this winter, okay? And that production will build throughout 2018. Tesla is going to be a huge growth company, monstrous growth numbers over the next few years. So this portfolio kind of boring, just a bunch of consistent companies, a bunch of household names, and then Tesla, which has insane growth right now. And so that kind of makes up for the lack of growth in these ones, particularly is, something like hyperbolic type growth like Tesla's about to have, guys. And for that reason, that is portfolio number 3. Alrighty, guys, time to reveal portfolio number 2. Portfolio number 2, starting here at the top, Facebook, okay? Billions of people every month use one of, if not multiple, Facebook platforms, okay? So first off, Facebook owns the Facebook platform. Secondly, they own Instagram, all right? Third, they own WhatsApp. They're also in Oculus and a lot of different products like that, but the majority of the money they get, the revenue, the profits, where things are going is from Facebook, Instagram, and WhatsApp. And so for that play, that's a strong growth company, but also a relatively stable company, but still strong growth at the moment, okay? McDonald's, I mean, who hasn't eaten at McDonald's at least once in their life? I mean, this is a worldwide name around the world, very stable company. They just keep doing their numbers year in and year out. Verizon, one of the biggest plays as far as a telecom play. Verizon Wireless, a lot of you guys probably have Verizon Wireless out there, pays a very big dividend, very stable business, okay? Amazon, huge growth play with Amazon. Obviously, the retailer of the future, possibly it could dethrone Walmart someday as the number one. Maybe it happens a few years from now, who knows, but very, very good opportunity for Amazon to be the number one retail player in the world. Also, they have Amazon Web Services, which is a huge business for them, huge business. I mean, if Amazon Web Services was just its own business, like it would still be one of the biggest businesses in the world, guys. So Amazon, very strong growth play. And then JP Morgan Chase, the bank, I mean, one of the in my opinion, my second favorite bank in the world, my favorite commercial bank out there. I think it's just a very well-run company. So that makes up my second portfolio. And well, of course, we got strong growth there with Amazon, strong growth there with Facebook, consistency with McDonald's, consistency with Verizon, consistency with JP Morgan. And now the time has come to reveal the number one portfolio. Alrighty, guys, are you ready for me to reveal my number one portfolio? This portfolio I absolutely love. If I didn't own the stocks I currently own, this is probably a portfolio that I would actually own. I love this portfolio, guys. This is number one. Oh my gosh, I forgot to put number one up there. Number one, I hope you enjoy this here. Coming here at the top is Apple. Very consistent company. Will experience, in my opinion, probably pretty nice growth in 2018. But just a consistent company. I mean, they keep their customers. They always attract new customers. Their revenues and profits have gone up probably, I don't know this for a fact, but if I looked into their financials, I would probably bet money that their revenues and their profits have probably gone up 14 in the last 15 years. Something like that, guys. Very consistent company, just all around the board, very well run. Goldman Sachs, in my opinion, the best investment bank in the world, and it's not even remotely close. Like them and the next closest one is like a dramatic difference, guys. It's the best run investment bank. They're so well politically connected. It is unbelievable, guys. Love Goldman Sachs. Starbucks, very consistent company. They're just going to keep putting up numbers. Their revenue will just keep rising, gross profit, on all those kinds of things. In the future, a very well-run company all around. People that get their coffee one day, they're going to go back and get that coffee the next day. Home Depot, one of the only retailers out there who's pretty much almost unaffected from Amazon, okay? Almost unaffected. Doesn't mean they'll always be like that. Maybe someday Amazon really starts to focus on Home Depot's business, but as of right now, there's no signs that Home Depot is slowing down anytime soon, and their comp store sales have been unreal the last few years, guys, unreal. And the last one is Google McDougal. Now, why would I include Google and Apple? Obviously, you guys know what Google is. You know, you say, well, they're both kind of, aren't they related and whatnot because they make some tech products? You gotta understand they're two way different business models, okay? Apple makes its money from selling hardware devices, okay? They sell hardware devices, iPhones, iPads, Macs, and mainly from services, okay? So services, so selling movies off of that, selling music, selling cloud, whatever it is off of that. So selling hardware and then selling services around that. That's where they get 90+% of their money, if not 95% plus of their money, right? Google, how did they make their money, the majority of their money? From search, okay? Google search, and from YouTube, all right? YouTube. And the other part is cloud, all right? Cloud. Hardware sales, we see the Pixel phone out there. We see, the Chromecast and a lot of different Google products, the Google Home and whatnot. Those are like pet projects to Google, okay? Those are not vital to Google. Yeah, would they love to make, an extra couple $1 billion a year in profit off of those? Yes. Will they probably be doing that? Yes. But at the same time, that's not what runs Google's business. Google's business is still Google search, YouTube, and the cloud services, okay? So a way different business model than Apple, even though they sell some of the same products. And Apple's all about hardware and selling services off of that hardware, guys. So very different. So this portfolio I just love. It's well diversified. All these companies are very, very different. And, we got Home Depot, Starbucks, and Goldman Sachs is kind of the safer type companies. Apple, I think, will have a nice strong growth year in 2018 and then probably slow after that. But Google is the main one that's a very strong growth company right now, and I don't see that one slowing anytime soon. And for that reason, it's my number one favorite diversified portfolio out there, guys. Let me know in that comment section what your favorite diversified portfolio is. I would love to hear your guys' opinion on this. I hope you absolutely enjoyed this video. Hit it a thumbs up if you got a lot of value out of this, guys. Don't forget, if you do not understand stock options, make sure you check out my 12-part course. It took me 3 weeks to put this together. A ton of work has gone into this, and I think it's just going to be phenomenal for all you guys. So click that first link in the description, join that membership group, and you will have access to that starting October 28th. Thank you for watching, guys, and have a great day.